Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody, let's take a look on the gold market. So here we have mostly the same result on euro accounts. The minor intraday retracement that we talked about yesterday has been completed. Market has tested 2840 area. And here we have a slightly bit more clarity on the overall performance. The point is that actually gold right now has very strong demand technical background. It doesn't relate to some fundamentals or to something of that kind. This is purely technical moment of the big funds flows where investors are rebalancing the portfolios and start looking more on the gold market and considering to increase maybe some part of the gold in the portfolio. So in other words speaking, the demand for the gold is rising. And it is more, even by taking a look at the headlines in the news, you could see that gold market right now stands, well, maybe not in a hype, but actually some high interest among the investors stand upon this market. And that makes the skew a bit overall performance to the upside, which could diminish the results of the possible bearish patterns that we have and making them work just on halfway. So for instance, you expect some deeper retracement, but due to these factors that I have mentioned, retracement will be smaller. It will happen, but it will be smaller. So bearish factors and patterns will become slightly weaker. And in the current price shape that we have on the daily chart, for me, it seems that we're going to get some tight consolidation, which is potentially bullish. I'm not excluding the fact that here we will get some kind of the flag consolidation near the resistance area. It's powerful target, and then market could try to just keep going higher. In general, the setup that we have on other markets, and we today discussed this in the euro currency video, so on the dollar index, on the 10-year bonds, on the euro itself, they're also bullish. I mean, against the dollar. So from that standpoint of view, on gold is not an exception. And with the additional technical factors that we have discussed, so here's might be absolutely enough background for possible upward continuation. Meantime, if we take a look at the lower time frames on the fall time frame chart, we do not have anything new. So this is our retracement that we discussed. Let's bounce up from it, and since then market stands somewhere around the top. So preparing for the payrolls. Speaking about the payrolls, yes, yesterday we've got more or less positive ADP report, but it was slightly better than expectations. To change the situation on other markets, and especially on the gold, pushing it down, it's have to be really outstanding payrolls reports. So probably twice better than expected, or 1.5 times better than expected. So in this case, this will happen. Yes, we could get some deeper retracement here, maybe some more demand for the dollar. But in the current circumstances, if we will get more or less same payrolls as usual, around expectations, and if even we'll get it slightly worse than expectation, that probably will be the positive sign for the gold. Anyway, on the hourly chart, you could see the pullback that we've got, completion of the XOP based on minor hand shoulders that we talked about. And currently, I suggest that it might be some kind of the tightened flag consolidation. So it doesn't mean that we will get the breakout immediately on the payrolls report, although it's also possible. But in general, that might be the potentially bullish shape, if even it will take for a few more sessions to be formed. For instance, some positive payrolls could trigger return back action to the 28.4, so making the market keep flowing inside and floating inside of the flag pattern. But on the daily chart, it will make no impact on the overall picture. Market will stand in the same range that has been formed 2 days ago. So that means that bullish context remains. Nothing has changed. Actually, the market shows very small pullbacks. If you have taken position yesterday 28.40, well, that's great. we probably could move stops to the break-even and see what will happen. For a new long position, well, it's difficult to recommend something, especially at the eve of the payrolls report. But I suppose that if we will get another leg down, maybe if report will be more or less positive and market return back down somewhere to the 2840 area, we could return back to idea of another long entry with this retracement. If we will get the acceleration, well, in this case, probably we will have to search for another chance to step in, probably already on the next week.